Welcome, everyone, to our panel on cyber insurance today. And I am so pleased that we have in one place, thank goodness they're nationally distributed because we have three of the leading thinkers in the United States on cybersecurity insurance. And I'm just really excited about this conversation. I've been looking forward to it. I will start with my old friend, Jim Trainer. Jim and I have known each other since our time serving in the government together. Jim is Senior Vice President at Aon and the former Assistant Director of the FBI for Cyber. And then over to Josephine Wolf. Oh, first of all, hey, Jim. Hello.
Hey, Jonathan. Great to be here.
Hi. Great. Good to have you. Josephine Wolf, I saw an article that she published in either the Wall Street Journal or Financial Times and saw that she's at my alma mater, the Fletcher School of Law and Diplomacy, where she's a professor at Tufts, and she's the author of Cyber Insurance Policy, which, if you didn't know, is obviously like the core topic of what we're doing, and it's sort of the leading book in the world on the issue right now. And she's published dozens of articles, including in the Wall Street Journal and the Financial Times and Slate. Those will be in the links on the Purple Hats homepage. Hey, Josephine, thanks for joining.
Thanks so much for having me.
Great. She did a podcast with us not too long ago, too. So thanks for coming back. And last but not least, certainly, Walt Powell is the lead field CISO at CDW and a noted thinker and speaker on cybersecurity insurance. And he came to us through the Purple Hats call for papers, which is great. So, hey, Walt.
Hey, Jonathan. Thanks for having me.
Of course. And you're joining from Kansas City, if I recall correctly, right?
That's where I live, but I'm actually in a hotel in Minneapolis today.
Okay. All right. And Walt has just published a white paper on the procurement process for cybersecurity insurance, and we'll put that on the website too. Okay. So there's lots to talk about. This is a fast moving space. The market is dynamic, and you've got really smart people here, of which I do not include myself on this topic as smart as them. But talking in advance, we want to get into a little bit on ransomware and on the assessment tools that are available for both the underwriters and the companies that are seeking insurance for cybersecurity insurance, the state of the market, and the wartime exclusion provision for insurance carriers, which is obviously enough for 45 minutes. So let's just jump right in. Josephine, I'd love to start with you because you're, as we said earlier, you're sort of you have a bit of an impartial view as an academic. So if you could give us a quick lay of the land, how does this all work? What are we even talking about? What are the big issues facing companies and the world today?
Sure. So I think it's helpful to think about cyber insurance a little bit in a historical context. You go back
Mm-hmm.
25 years and insurers start selling essentially coverage for data breaches because that's what companies are worried about. In the late 90s, early 2000s, you've got a bunch of states passing data breach notification laws. So you're going to have to tell your customers when you lose their data. There's some risk they're going to sue you. There are some costs associated with those kinds of lawsuits and required notification. So you get sort of this early wave of insurance policies that are really kind of, we're going to help you pay your lawyers, we're going to help you pay for the notification cost to send out letters to everybody. And then pretty rapidly, as sort of the threat landscape evolves in the early 2010s, you get companies saying, actually, we'd like coverage for business interruption related to cyber attacks as well. We'd like coverage for extortion and ransomware. And so the insurers really sort of expand these policies from these fairly narrow third-party focused data breach coverage policies to covering a whole lot more types of threats and selling to a lot more companies. An area that's growing pretty rapidly in the 2016,
Mm-hmm.
2017, 2018 timeframe. And then I think two things happen that really sort of bring us to the point we are today in the cyber insurance market. One is you get a huge spike in ransomware in 2019, 2020, and that forces the insurers to go back to sort of their math around how do we make sure that we're making money off of this product and think really seriously about how are we going to reduce our policyholders' risk and not just assume that we'll be able to cover all the claims that are coming in because so many more claims are coming in than ever before at that moment. And the other thing that I think really sort of forces everybody to rethink what they're doing a little bit is we start seeing some of these really big state-sponsored cyber attacks, things like NotPetya and WannaCry in 2017, and insurers are facing claims from hundreds of policyholders in some cases around individual attacks. And they start thinking about how are we going to protect ourselves from having to pay out when we see these really massive attacks. And those are some of the issues you see this market grappling with right now.
Can you just give us a sense of what were some of the sums that folks were seeing at the higher end at that point on ransomware?
You mean in terms of the claims and the ransoms being paid?
Yeah, what you're paying out.
So we
Yep.
saw some multi-million-dollar ransoms being paid, right? Some of those are public. People know about the Colonial Pipeline ransom, the JBS ransom. Those were on the higher end, for sure, of the average ransom, but they were not unheard of at the time, right? It was, I think I've spoken to insurers who said their ransomware claims were going up 400%, 500% just in the span of a year at that point.
Okay, so Jim, you're paying all those ransoms out of pocket as the insurance provider. Is that right? It all comes out of Jim Trainer's pocketbook.
No, as you probably know, Jonathan, going way back to my previous career, I've always advised clients, as well as victims when I was in the government, to not pay the ransom. It just enables this activity, recognizing it's ultimately a business decision. But all the federal government, in particular Treasury, with potential risks associated with OFAC and other regulatory and legal exposure, it's not a great idea to pay the ransom, particularly if it's an actor who's been sanctioned. So the largest ransomware payment that I'm familiar with is about 40 million. If you go back to when Josephine described kind of the early days of ransomware, we were really looking at a threat that was, in the hundreds of dollars, focused on individuals. And then the bad actors realized the return on investment could be much greater if you go after organizations and do kind of a one-shot hit. So that's why it's really evolved, particularly the last couple of years, which had a big impact on the market.
First time I ever heard the word ransomware was in India in 2015. And at that point, I'm pretty sure the kinds of attacks that we were seeing were against individuals, right? It was like small hits, easy to do. So Jim, you're in a strategic position at Aon, not just from your experience at FBI, but you see the market evolving quite a bit. What's your read on the state of play right now in cybersecurity insurance?
So I came on board with Aon in 2016, and at the time I had a colleague who used to talk about cyber insurance, and she would describe, cyber insurance been around for about 14 years or so, and if you have teenagers, if you have a 14-year-old, cyber insurance policies kind of behave that way, meaning that they're wildly unpredictable, meaning from policy to policy. But just like our children mature over time, so has the cyber insurance market, even though you go through some difficult years. So the market, roughly the size back in 2016, was around $2.5 billion in terms of premiums collected, and it's grown to around $6.5-7 billion. It really depends upon who you ask, but it's definitely grown. But in comparison to other lines of insurance, like property and casualty being the big one, it's a very small book of business, but for the insurance industry. But it has significant consequences for organizations suffering these kinds of events. So ransomware particularly impacted premiums 2021, 2020, saw substantial increases, 100% increases in some cases, and even more in premiums from the previous year. We also saw greater retention, sublimits associated with ransomware and things of that nature. So the market is maturing. There are some changes that are happening in 2023, but in general, we think the market is more favorable this year than in previous years.
Now, Walt, I want to pivot to you in just a second on this, but Jim, from a standpoint of an insurer, what are the kinds of things what are the issues that an insurance company grapples with when they think about insuring, when they think about offering a policy to an insuree?
Yeah, the underwriting process has matured. Data aggregation is a big one. So one event leading to multiple claims. So just think of the major cloud providers. That's what's really scary. These big ransomware attacks that Josephine mentioned, the NotPetya's, where one event can lead to all kinds of consequences. The numbers I've seen associated with that are a $10 billion hit for NotPetya. So that's globally. So that's the kind of things that really impact the market. But ultimately, most organizations can still get coverage. The question is, what the premiums will be and what kind of mitigation strategies that you would want to put in place before you go to the market. And I'm sure Walt, being a CISO for a large organization, is on the front lines of that.
Yeah. So, Jim, could you just, for those of us who are, let's say, we're seeking insurance, like how do you get yourself into the best position to respond to an insurance company from your standpoint? Like what, and maybe you're not the right person at Aon to talk to about this, but I'm curious for your thoughts on that.
Yeah, well, it always starts with a good assessment, and Aon has a tool. There's other organizations that have tools for this thing where you do a a broad
Hmm.
assessment, and ours focuses on 9 critical domains and network endpoints, things of that nature. But really getting a good sense of the tools that you have in place, the data that is your crown jewels, and then telling a story to the carriers as as a broker builds the tower for you for your coverage. That's really
Hmm.
the program and the way things evolve. And various carriers, there are 4 major carriers that place most of the coverage, and probably 60 or so others, and from the Lloyd's of London syndicate. So it's really getting a good sense of what you're strong at, what you're weak at, demonstrating room for improvement as you move forward.
Hmm. Well, what does this feel like on your end? When how can we make this easier? How can Jim make it easier? Tell him personally how to make it easier.
Sure. So, it's funny what he just laid out, because you'd mentioned the paper that I wrote, and in the paper that I wrote, I spelled out for our CDW clients a framework for how to do this. And in the framework, there's 4 phases, and the first 2 phases are all exactly the things that he just said, right? So the first one is, it's like, how do we make this easier? Is um, is that assessment piece. Understand what you have today, right? But the insurers have been traditionally kind of looking at this from a tools point of view, and we're starting to understand, like, it's time to look at this from a risk point of view and understand the risk model. And I have a lot of times, I have folks ask me, should we still get cyber insurance? Is it going to continue to be something that's insurable? And I tend to think yes. There's been a lot of things that are heartening. Ransomware is actually down. The CISA strategy that came out this month seems to indicate that the federal government has eyes on this and wants to make moves to help prop up both insurance and drive down ransomware. So that's heartening. So I tend to think it's going to continue to be something that will be insurable. And to me, it's the best way to buy down your risk. So if you think about, like, hey, I have X million dollars worth of exposure, what can I do to buy down my risk by whatever is your policy amount, $1 million, $5 million, whatever, and you compare that to what your premium is. There are very few tools that you could buy that would buy down your risk that amount, right? So it's really a good return on investment when you look at it that way. But you have to understand your risk. You have to start with being able to quantify your risk. And that's a thing that's been traditionally very hard, and the industry is just now coming around to. Um, Being able to get the outside in view of what you look like. So whether you're engaging with whatever kind of partner it is, to see what the world sees you as, so that you can understand what you look like. And then the next phases are all pretty simple, right? The next phases become, make sure that when you're filling out the application, that once you understand your posture, that you're telling the truth, and that you're telling that story. So he said, hey, work with your broker to make sure that you're telling the story. Well, we'd gotten mired down as CISOs in how do we answer the yes no questions that they give us, that were originally like 4 or 5 questions and are now 4 or 5 pages of questions. And we see these yes and no's, and we get scared because you can't answer yes to these absolutes that are, do you have MFA everywhere? Well, as soon as you answer yes, that's not true. So you have to answer no, and if you answer no. So now you have to try and figure out how to explain your story. And so we tell folks, like, don't be afraid to put it into a Word document and tell your story, and tell the risk story, and explain how well you understand what your actual risk is, because that's what really people care about. And then once you've done that, then you just need to understand your policy, understand what you're getting, and make sure you're getting what you think you're getting, and understand the things
Hmm.
you've mentioned, active war and things like that, those types of exclusions. We'll talk about those some more, I'm sure. And then the last thing is, make sure that your claims ready, so that you're doing the things that you need to do in case you need to, and they're lined up to your incident response policy, and that in your incident response plan are all the things that are in your policy that you're supposed to do. So that's the things that we can do to
Hmm.
make it easier. As far as what are the things I would ask of Jim to make it easier, I would
Well,
love to
let's
see some
let's
kind of
let's actually let's
standardization,
hold on that.
right?
Yeah, let's hold on just 1 second on that, Walt, because I think you've just
Right.
articulated, as you're talking, it sounds to me like a tremendous amount of work for someone. And
Oh
I'm
yeah.
thinking about a CISO who has requirements. They've got technologies that they have to procure. They've got a board and a senior leadership that they need to be responsive to. In some cases, they have hundreds of people who work for them. And then they have to be the one who says, like, I'm communicating this information outward. I know they have a legal and audit team oftentimes that are helping them do the communication, but that all sounds like a tremendous amount of work. And so if you, as you advise people at CDW and otherwise, like what are some of the, how much concern do you see from them as they face this workload? And Josephine too,
Oh,
I'm curious for your thoughts on that.
complexity is like one of the biggest problems, and it's not just here that the complexity, but complexity across the board, stack sprawl, and so much guidance complexity. Every jurisdiction thinks they have to have a privacy rule, and CISA now has every type of guidance, and the White House has every type of guidance. Like, complexity is one of our biggest problems in the industry right now. I'm not sure how everybody is managing it, to be perfectly honest with you. I'd be curious to know what Josephine's take is on it.
So I think there's definitely something that I hear from a lot of companies, which is filling out these questionnaires has gotten harder and harder and takes longer and longer. And I
Hmm.
think some of that is positive, right? Some of that is the insurance industry moving towards trying to do more thorough assessments and not, asking 10 questions and saying that's all we need to know about your security posture. And some of it may not be progress, right? And I think this is the hardest part to gauge when you ask people to fill out a 100-question form, and each of those questions in some cases is really quite nuanced, right? As you brought up, the question of sort of, do you use multi-factor authentication is not actually a one-word answer. You can say, well, here's what it looks like on my Windows devices, here's what it looks like on my iOS devices. There's a lot of nuance in how people start answering those questions. And I think the important issue, and it's a hard one to answer, and I've discussed this with many underwriters, and many of them have different perspectives on this, is how much of that information is actually directly relevant and useful for trying
Hmm.
to do the risk assessment and price the policy. And I think what we're seeing right now is a lot of insurers who are not totally confident in what information they need to do that, who feel that the landscape is still shifting and they're still
Hmm.
figuring out how to design and price these policies, and therefore it's better to have more information. And so we're at this moment in my mind where policyholders are being asked for an enormous amount of information because there's uncertainty about what exactly the most important pieces of knowledge to have are. And my hope is that we're going to see that evolution sort of reach a point where instead of taking months and months answering a questionnaire, we can get to a simpler setup. But I don't think we're there yet.
Yeah.
Sure. And I'd say it's
Yeah.
not just the too much information that they're erring on the side of too much of, it's the too many controls. Also, I feel like oftentimes the underwriters don't know what they're asking for. So the big hot one this year has been privileged access management. And they're just like, hey, everybody should go get privileged access management. Like, it's no big deal. It's an enormous undertaking to put in privileged access management. And I've seen lots of organizations who have 3-year projects where it's not completely done, right? It's not a trivial thing to do, and the insurance underwriters are just like, go do that real quick before we write this policy. Like, you can just do that real fast, right?
Great. Yeah. So, Jim, you're at risk of being put into the hotspot of being the big bad insurance provider who's causing the stress and strain. And we don't want to do that to you because we know you're a nice guy. But talk to us a little bit about how the insurance providers see this complexity and how not how they empathize with companies, but yeah, what do you think?
Well, I do think that the market has matured, and it's also important to note that Aon is a risk advisory brokerage firm. So we work for the clients. The carriers, there are really four major carriers that place the majority of the cyber market, that being Beasley, AIG, Chubb, and AXA XL. Beasley is the largest provider now of cyber insurance. And then, as I mentioned, there are about another 60 or so syndicates in London that
Hmm.
will be a part of that tower. So you're creating a kind of a cyber insurance tower, whatever number premium, whatever number coverage you want, say 50 million, 100 million. The largest tower that I've seen is about 600 million. That's been placed. Capacity at this point is really limited to around 500 million for large organizations. The insurance carriers will not put up more capital to underwrite that risk. So anything above that would really come from reinsurance or self-insured or things of that nature. There is an opportunity, not to get too much into TRIA, if you're not familiar with that, it's Terrorism Risk Insurance Act. There's been conversations. It's actually in the national strategy about considering having government backstopping, particularly as it relates to to the critical infrastructure is one area. And I do
Hmm.
think that that would help mature the market. A lot of
Hmm.
the research suggests that, and Josephine can speak to this more than I can, is really how big can this market grow? Can it get up to 30, 40 billion annually across the world? If we're looking at 7 billion right now, and most cyber insurance is in the United States. It's not external, although there's coverages in Australia, New Zealand, Canada, and all throughout Europe. But the vast majority of policies are in the United States, and that's where we see a lot of
Hmm.
the threat activity. So the carriers, some carriers like Chubb has a whole training program for their underwriters. I'm sure others do as well. So I do think the challenge is this is like a snapshot in time. The four major carriers have four different questionnaires. As Walt indicated, some of these questions are not easy to answer. They're not one-word answers, as Josephine mentioned. It's really a challenge. But I do think as machine learning, the ability to get to analyze data, lessons learned from breaches, information sharing, more government enforcement action on these bad actors. I think I am more a half glass full kind of person as it relates to cyber risk and insurance. It's just going to take more time.
Yeah, I mean, I'd be disingenuous if I didn't mention that we just launched a case study where a customer of ours used the automated testing data that they have. They ran assessments against their security controls, and they used that data. And as a result of the data that they have, they could peg their cyber insurance premium. They could communicate it to the underwriter and actually set the premium, which ended up leading the person who ran the testing process to get a promotion. So I see there's like a level of validity, and if you see in the new national strategy, I think it was on page 8, it says regulations should be performance based, which is this. There's a movement towards outcomes overall, I think, and away from purely compliance for its own sake. To say, look, can you actually generate data that shows that you're achieving this level of performance? And as I think it's probably a good time to pivot to the what is it, the wartime exclusion provision. When we're in Josephine, you've done a tremendous amount of writing on this, so I want to open up with you first, but the idea that a cyber attack could occur impacting multiple companies and multiple infrastructures at the same time is leading some insurers to say that they don't want to insure against it. But one counter argument could be like, you have data to prove that you're actually ready for certain kinds of attacks and that your position is much better. So I just wanted to flag that one finding first before we pivot to the Wartime Exclusion Act. But over to you, or provision, Josephine.
Sure. So I think the idea that you could have a cyber attack that hit all of your customers at once and that you were paying out way more claims than you anticipated is not a new idea to cyber
Hmm.
insurers, right? I would say, as long as I've been studying this, it's something people have been talking about. And the analogy that's often used is kind of, okay, if I'm selling flood insurance, I'm not going to only have policyholders in Miami. I'm going to get some policyholders in other places so that if there's a big flood in Miami, I have other people who aren't filing claims. And the problem for cyber insurance has always been, how do you kind of diversify your risk pool that way? Right. You can
Hmm.
say, I'm going to have policyholders with different operating systems, but there aren't that many operating systems, right? Same thing with cloud providers. And so it's really hard to say, okay, I think I've set up my policyholder base so that any individual cyber attack isn't going to hit everybody at once. And I think that's been a theoretical concern for as long as people have been thinking about cyber attacks and cyber insurance. I think what really sort of brings it to court and makes it an immediate concern for carriers and for policyholders is the 2017 NotPetya attack, where you have the Russian government launch what looks at first like a ransomware attack, because there is a ransom message that kind of shows up on the screens of the computers that are infected, but turns out to just be a wiper attack. That is, all of the data that's infected is destroyed. There's no way to recover it, even if you do try to pay a ransom, and causes, as Jim mentioned, about $10 billion worth of damage, maybe more. It's kind of pegged as the most expensive cyber attack in history by the White House, and a lot of companies file claims, right? It's a cyber attack that's pegged to a vulnerability in the Windows operating system. So going back to that idea of, how do you make sure that all of your customers don't get hit at once? You don't if it's Windows. Lots of your customers, lots of your policyholders are going to be using Windows. There's no way around that. And the thing that happens that I think is really crucial for understanding how this shifts the conversation in the insurance market is that there are companies, and the two sort of biggest ones that file public lawsuits are Merck and Mondelez, that suffer really large losses during NotPetya. And first they go to their
Mhm.
cyber insurance policies and file claims, and then they go to their property and casualty policies, where they also have provisions covering the destruction of electronic property and data. And they file much larger claims because property and casualty policies are much bigger. So Merck is able to file for more than $1 billion worth of damages. Mondelez is looking for about $100 million. And those are the cases where you actually have the insurers saying, no, we're not going to cover this because we have this war exclusion written into our property and casualty policies, and we've had it going back decades. And we think that when the Russian government launches an attack that's sort of initially targeted at Ukraine because it's being distributed by some Ukrainian accounting software, even though it then spreads to the rest of the world, that's essentially an act of war. That's essentially the
Mhm.
kind of thing that we as insurers cannot be expected to predict and model and anticipate and pay for. And
Mhm.
you get these two really interesting court cases. The Mondelez one has now settled. The Merck one has gone to appeal. So there was an initial ruling where the judge ruled in favor of Merck and said the insurers do have to pay this out. This wasn't an act of war. That's now on appeal to a higher court, and we'll see where that lands. But as that's happening, the insurers are rewriting that language to sort of make much crisper what is the actual thing we're excluding. If it's not going to fly just calling it war, then how do we define it?
So, how do we think about this idea that Jim mentioned earlier in the national strategy that the federal government would back up insurance? Jim and Josephine and Walt, like, how does this resonate?
Well, so this is it's terrifying because it's still happening today. The situation that happened in 2017 with NotPetya is happening today in Ukraine. So Ukraine and Russia are fighting today, and today the Russians are launching attacks against Ukraine using
Mhm.
wipers that are wormable, and it is just like there, but by the grace of God go us that they have not escaped and created the same situation again. We've learned kind of nothing, right? like
Mhm.
However, what would happen if it happened again today is that the policies have all been fixed, right? Like what happened in the settlement was that the language wasn't clear enough about cyber in their policy, and that's why they ended up getting paid. But that
Mhm.
wouldn't happen today. So really, there are a lot of people who would be left holding the bag, and it would be our organizations. And I don't know what that looks like. I honestly don't
Yeah.
know what it looks like if we have our Fortune 100s left holding this bag. I don't know.
Well, so let's just skim this out for just a second, right? Like, if there's $1 billion claim, let's say again, Josephine, who had the $1 billion claim? Was it Maersk or who
That
was
was
it?
Merck.
Merck. So there's $1 billion claim made by a global company, and the wartime exclusion provision says it's an act of war. Then, if that policy continues and insurers aren't insuring it, then nation states are just going to keep doing what they're doing, and the only hope we have is improved cyber defense capabilities, and that feels like an untenable situation. And is that partially, Jim? What's driving, Jim, a little bit? Can you talk about what the federal government might be thinking regarding providing a backstop for critical infrastructure?
Yeah, I think it's important to note to put a little to back up slightly. As
Yeah.
Josephine indicated, the cyber policies for those companies responded. What also responded was the property and casualty. And what you saw previously is you saw these cyber endorsements on a property and casualty policy. So essentially, no underwriting, but you could get additional coverage, limited coverage on a cyber event that could impact, in this case, destruction of property. So that those policies had that poorly written wartime exclusion. So coming into effect the end of March of this year, Lloyd's has provided guidance to their syndicate, to the carriers who are providing coverage in this space. Four different types of language, policy language that they would want inserted that they're comfortable with having in the cyber policy. Beasley has their own language, which went into effect January of this year. So, to Walt's point, the carriers are tightening up the language around what constitutes a wartime act that would be excluded theoretically from a cyber policy, but it's not that cut and dry because ultimately it's on the burden of the carrier to demonstrate that that provision applies. And ultimately, whether it's Beasley or any of the big carriers, they're in the business of trying to be profitable companies. So if you start to deny these claims, it becomes much more challenging for them to generate business, because they're being viewed as potentially not a responsive carrier. So this is still a little bit of a gray area, just regardless of the language being tightened up. With that said, I do think if the federal government is able to have some type of backstopping provision, now TRIA itself would cover cyber terrorist event, but there's essentially very few actors are involved on behalf of ISIS or any of the terrorist organizations designated by the State Department. This is really foreign nation state actors that could be launching these attacks: Russia, China, Iran, and North Korea. So, to the extent that the government can have capital to cover certain types of perils, certain types of risks regarding critical infrastructure, to the extent that government attribution, and in my view, there are really two countries that are positioned to be able to articulate attribution at a level that would be appropriate, and that'd be the United States and the UK. It's one thing to say, a country in, a smaller country saying, we believe this is a Russian attack. If say it's Ukraine, making that notion, I'm not sure that it creates a whole can of worms and conflict and risk for carriers that may have to, invoke the wartime provisions. So this is still an unsettled territory in terms of the wartime exclusion provision as well as cyber TRIA. I was happy to see it referenced in the national strategy, and I think a lot of smart people are trying to get their head around this. Like, if it was going to exist, what would it look like?
I think those are really good points. I would say, one of the things that makes this really hard, even with newer language that's not about war, but instead about state-sponsored cyber attacks, and kind of more trying to say, even if there's not a traditional war going on, we still don't want to pay for these. You still have this huge problem of whose attribution gets to decide, right? And I think one of the things we didn't really see thought out around the NotPetya lawsuits was that attribution fight, partly because so many countries, including the US and the UK and many others, had already said this was definitely Russia. But partly because that was not what the judge in the first Merck ruling came back and said, right? Didn't say, we don't think this was war because we don't think this was government. It came back and said, we don't think this was war because there was no use of armed forces. There was no traditional warfare. So I think we're still waiting to see kind of how the courts are going to treat the claims about, was this a state-sponsored attack or not? And that could continue to create some uncertainty and some confusion about what is and isn't paid for. I think on the government side, you have a pretty big gap between what the Federal Insurance Office thinks is appropriate for the federal government to pay for and what insurers think is appropriate for the federal government to pay for. And on the one end, you have the Federal Insurance Office saying, look, TRIA already applies to cyber. When there's a serious enough cyber attack, of course, we're going to come in and help pay for it. That's what we did after September 11th. We came in and we helped pay for something. But we can't tell you exactly what that cyber attack is going to look like ahead of time because we don't know. Right. And what you're asking us to do is sort of lay out for you in advance all of those parameters. And what the insurers are saying is, well, that's totally unhelpful. Right? If we're trying to understand what we have to cover, for you to say, we'll know it when we see it after the fact and we'll let you know, is not actually helping us sort of understand our coverage. So I think there's going to end up being a very large space between where insurers would like to end their coverage and where the federal government is going to feel that it's appropriate for them to step in and help pay for things.
This is totally fascinating and extremely hard. And I'm glad that you and Jim and Walter are working on this part of it. But in particular, Josephine, I think this gets into such levels of legality and economics and policy. But the one question I have, and I really want to get back for our audience here, how we make this process easier. And Walt, I want to hear your thoughts on that. But if I'm the government, the government, my economics professor at Fletcher, Carson Kowalczyk, used to say, the government doesn't want to leave the world in debt. I never quite understood what he was talking about until I saw the first of two bailouts happen in 2008 and then this most recent one. If the government is going to ever state, we will bail out X, Y, and Z when this happens, then the market is just, everyone's just going to flip things up to the government. So I can kind of understand the government's position if they're not going to be clear, and they'll kind of say, we'll know it when we'll see it. And then they'll take action if and when that time comes. And that will then set case law for when things happen. Is that somewhat right?
So I
Or
think what the
completely wrong?
government is going to do, and it's kind of what they've done for TRIA with terrorism, is they're going to set some criteria. They're going to say,
Mm-hmm.
here are the criteria for a cyber attack that will trigger a government backstop. And instead
Mm-hmm.
of those criteria being linked to, say, loss of life or things that we would, typically associate with terrorist attacks, they're going to be things that seem a little bit more kind of in line with the types of major cyber attacks we've seen.
Mm-hmm.
I think they're going to stop short, if I had to guess, of saying like we would have helped pay for NotPetya. I think the federal government's been pretty clear that they don't consider that to be their job, even as expensive as it was. And so I think that's what you're going to see the government moving towards.
Yeah.
What the industry insurer response is going to look like, I think, is actually a little tricky for me to predict at this point. Ideally, what you would want to move towards is kind of what you have with war insurance from governments,
Mm-hmm.
where the government says, we will insure war using this definition, and insurers then take that exact same definition and put it into their war exclusion. And then, okay, anything my war insurance doesn't cover, my traditional property and casualty insurance will cover, because the language is exactly the same. This is what you get in some of the historical cases. So, like if you look at the Pan Am hijacking, where Pan
Mm-hmm.
Am files a claim for a plane that's blown up. They go to court when their insurer says, no, we're not going to pay for that. That was an act of war. And they say, look, either
Mm-hmm.
our war insurance from the government is going to pay for this, or our property and casualty insurance is going to pay for us. And you just need to tell us, is this hijacking an act of war or not?
Mm-hmm.
But to get
Mm-hmm.
there, you need the insurers to kind of meet the government exactly at that same criteria and definition of what's a cyber attack that the government pays for.
Which is also why I like the government saying they're going to come out with a mandate for critical infrastructure, for a cybersecurity standard for them to meet, because that actually moves us away from what they'll pay out, and it says this is what good looks like. And then that's actually the first, to my mind, that's the first sequential problem that they have to solve. If they can't define what good looks like from a defensive standpoint and set a mandate, then they're going to be in a more awkward position when it comes to handling things on a case by case basis for insurance. But we've just got a few more minutes left, and I want to pivot to relieving the pain on the CISO when you're receiving these kinds of insurance demands, because they do have to manage teams and like actually fight against the intruder, which is different than answering a questionnaire from an insurance company. So what are some of the things that we think could happen for companies to make the burden easier for them as they're trying to get insured? And Walt, why don't we start with you?
Sure. So to your point of the ask, especially from the government, like some of what was in the strategy was heartening, but still not the level of focus on defense over offense that you would want, right? So if you think back to like the late 1800s, early 1900s, it's like the Wild West where bank robbery was a real problem. I feel like we're in the Wild West of cyber, where cyber bank robbery is a real problem. And at that time, banks had to handle their own security, and everybody kind of did their own thing. And sometimes they would invoke their own police forces or do their own investigations or figure out how to try and keep their bank safe from Jesse James all the way up through Babyface or whoever, right? And what we ended up doing was creating an FBI to go handle that. And then there's a standardization of what banks do today, and every bank knows what their responsibility is. That's what we did instead for here. Was the government went out and created a crack set of bank robbers, and we focused on how to be the best bank robbers instead of how to create a set of standards of how to protect our banks. And so when you're the CISO, you're in the Wild West trying to figure out how to build your own FBI, right? So from the government, from our insurers, from everybody, that level of standardization, what you just said, what does good look like? What is the expectation from us? What is the thing that everyone should be doing, right? Like, I need a safe, I need my ink packs, I need whatever it is so that I can do that, focus on those things, and then be in the business that I'm supposed to be in instead of doing the police job, right?
Yeah, that's very helpful. Jim, any reactions?
Yeah, I think so. One area I think, which is addressed to a degree in the national strategy, is about incentivizing organizations. There's a carrot and a stick component of the national strategy. I do think the consolidation of the cybersecurity industry. We've seen that with a couple of the major cybersecurity firms, and I think we'll continue to see that. Where ultimately that's their core competency. No disrespect to the large financial institutions or the healthcare organizations, but that's not their core competency. And I think to the extent that industry, the cybersecurity industry, can provide more of a turnkey solution for organizations, and that's very difficult, easy to say, and very challenging to do. But I do think over the next 10 years or so, we'll see more standardization that's just driven by industry rather than
Mhm.
having an organization try to buy, 20 different tools from 30 different vendors and things of that nature. It becomes very complicated in terms of the network. And we're seeing consolidation, as it relates to just where data is stored from on-prem solutions into the cloud. It makes it to a degree easier to manage, but also makes it also potentially more vulnerable from bad actors. So I think the technology piece is very important. Jonathan, you probably recall in an article I wrote with an Aon colleague, I put really three things in focus. One was capital, and we've talked about that it's capital, consequences, and collaboration. Capital is that cyber tree apart. How can the government incentivize? What kind of controls? What kind of framework can they put in place to bring in more capital, more confidence in the insurance industry and the policyholders that the market, that a claim will be, the policy will respond and claims will be paid. So that capital piece is, we've talked about that at great length. The collaboration piece is, I think, actually is an area that we actually do reasonably well in government. The various, the ISACs, ISOs, variety of nonprofit organizations, the NCFTA, there's the cyber centers, there's a variety of guidance from CISA. So I think there's room for improvement in that area, but sharing information, getting a better sense of the threat landscape is an area that we can continue to improve on, just speeding it up. And I know there's components of that in the national strategy. And then the last one is really this consequences. And I think international partners in the government and Cyber Command and others need to be far more active in disrupting the bad
Mhm.
actors' networks. Most of these adversaries are very difficult to get their hands on because they're provided safe haven by certain nation states. But a ransomware group should not have a help page that allows somebody to assist them in paying a ransom. I would be shutting it down regularly. Right? That's the kind of stuff where it becomes almost just not worth the effort to go after, to be in the ransomware business because the U.S. government and our foreign partners are going to make it really difficult. So that's, something I think we'll see in the coming.
Was there actually a ransomware group that had that help
It's regularly.
support button?
Yes.
Yeah. Okay.
Some of them have call desks.
To,
Call
Helpline.
centers.
Some of them
oh
have
yeah,
call centers.
Call
Yeah.
centers, 24/7.
Okay.
oh yeah,
Yeah.
yep.
Mhm.
I would be
They'll
doing
help you
denial of
recover your keys
service attacks on those call centers. They call TDOS, like denial of service attacks.
for sure.
Right.
To
That kind
your
of stuff.
to your point, Jim, it would be really great if we could get from the providers a framework where they agreed, like, hey, here is our expectation. Do you think there's any appetite among the providers to get to that? Because I realize that part of what their secret sauce is understanding risk. And so there's some benefit in them being able to do it better than their competitor, right? So can we ever get to a world where they can have a standardized framework for us?
I think the short answer is no, but they are sharing more information. And Josephine may be able to speak to that, where the carriers are sharing more information as it relates to cyber than they have in the past. But they do view that as a differentiator. Like we have, Beasley nobody's probably has more data on ransomwares than Beasley, right? I mean, they've been heavily involved in that market. But I do
I do
think that
think
lessons learned. So, and Josephine, go ahead.
I was just saying, I do think there's some regulatory pressure there, which has been kind of interesting because I think if you go back 10 years, the insurers are going to folks at the Department of Homeland Security and around government and saying, we're going to collect all this really great data, and that's going to allow us to drive down risk. And now you have some people in government saying, really, has that happened? We'd like to see some evidence. And I don't know if you read like the Cyber Solarium Commission recommendations, right? But there are recommendations around the government should set up a Bureau of Cyber Statistics. We should be collecting this data ourselves because we're not getting it from the insurers or anyone else. And so I think that is serving in some ways to put some pressure on the insurers to work a little bit together to release a little bit more aggregate data. And it's for sure it's a gradual process, and I don't know where exactly that will end up, right? It could end up being fairly superficial. It could end up being something a little more meaningful. But I do think that threat of sort of the government might make us report stuff if we don't voluntarily disclose a little more could move the dial a little bit. We'll see.
That's a great place to stop. Thank you, Josephine, for involuntarily creating a great concluding statement for this panel. This is so exciting. I think the three of you, obviously, you're probably overemployed given the demands that you face in the work that you do, but you're at the cutting edge in what you're doing. Josephine, Walt, Jim, thank you very much for joining today. And keep it up. I think we should reconvene this at some point to see how much progress has been made, because there's been so much change in the last year. So thank you for joining today.